I want to share with you the number one way to make sure you save money on insurance. Now, this is going to apply across the board to your auto insurance, your homeowner's insurance, your health insurance, your disability insurance, even your liability protection. And it's this: have savings. Now, that's not really an insurance idea to be able to have savings, but let's talk about why it matters and how it really helps you to increase your cash flow and save money on insurance by having lower expenses. When you have savings, say you had 6 months worth of living expenses set to the side, so you do not have to be worried if you had a dip in income or if you had some unforeseen expense arise. Imagine whatever that number is for you. Maybe your living expenses are $10,000 a month. That would be $60,000 sitting in savings. Maybe your living expenses are $5,000 a month. That's $30,000 in savings. Maybe it's $20,000 a month. That's going to be $120,000 in savings. So keep that number, whatever it is for you, in your mind. 6 months worth of expenses in savings. What that actually allows you to do is to raise your deductibles. So in your auto insurance, if you raise your deductible, that means you are going to pay more at the bottom, at the smaller claims level, the one that you probably wouldn't even call in the insurance company and report the claim anyways. You are going to handle that yourself. You're taking on that most likely claim and taking that risk away from the insurance company, meaning the insurance company is on the hook for anything that's catastrophic, the really big stuff. And by doing that, you lower your premium. Now, this is the same in your homeowner's policy and your liability coverage, because if you have a higher deductible, your premium that you pay in each month is going to be less. Now, here's how it applies to disability coverage. Should you become disabled, disability insurance is going to pay your income, or a portion of it, usually up to about 65 or 70% of your income, if you're disabled, if you're no longer able to work. And there's a lot of different ways that you can have disability set up, whether it's own occupation or any occupation. The key is that when you have savings, you can extend your elimination period. And this means the length of time that you can go without having income. So if you have no savings at all and you lost your income today, you would probably want that income from the disability company to start as soon as possible because you can't afford to go without income. But if you had 6 months set aside, then you could extend your elimination period. Usually about 90 days is that sweet spot where you say, I'm not going to need income from the disability company for 3 months for that 90 days. And then after that, I'll receive the payout. So having the savings allows you to shrink your premium costs because having a longer elimination period with your disability coverage allows you to lower your insurance rates. It also applies to your health insurance. You're able to increase your deductibles and your max out of pocket if you know you have the money sitting on the side to afford that. Now, when you look over the cost of all of your insurance, if you add up the savings, it's a tremendous value to have savings set to the side. Now, again, this is about the external rate of return on your savings. So savings is not just this value in that it earns a rate of return or an interest rate in the account that it's sitting in. It allows you to do other things in your financial life, specifically saving money on insurance premiums to make sure that you don't have any more dollars flowing out of your control than absolutely necessary. You can lock in that peace of mind, make sure you protect your livelihood, but spend as little as possible for it. Hey, thanks for watching. I really hope you liked this video. If you did, click the link in the description box below for more information. Like this video, share your comments, questions, and feedback in the comments section, and don't forget to hit subscribe to our YouTube channel.